We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more. We're going to win more. We're going to win.
Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks slid on Wednesday as investors fielded the latest wave of earnings in a busy day highlighted by Tesla and IBM. And stocks were actually kind of red today, led by the mega caps, led by software, tech names, high momentum names. Now, Google and Meta kind of bucked the trend right here for comm services. We'll talk about why that is the case a little bit later. But then you look at stuff like Netflix, who reported their earnings down 9%. Disney was down. GE was down. GEVETN. Eaton was down, right? Some of these mega cap names, these momentum names, Tesla and Amazon were down in excess of 2%. Apple was down 2.38%. Infrastructure, excluding Microsoft, was down in a very, very big way. Nvidia, AVGO, semiconductors as a whole, very, very red, really leading the market lower. Software, a little bit more resilient, still red. However, financials, for the most part, despite their stellar earnings, really took it on the chin, except for like asset management, insurers. They were all right. Berkshire was okay. Visa, MasterCard were all right. But the banks really taking it on the chin. So all in all, I mean, the market cap weighted indices didn't do too well. The equal weighted actually held up fairly resiliently, relatively speaking. The S&P 500 was down 0.84%. Now a very, very ugly day. You can see we did have a little bit of tariff jitters here in the middle of the day. The market still a bit in shock and awe with regards to tariffs. The RTY, the worst performer, the high beta names, and you could see the worst performing sectors, right, in the S&P 500 was the technology sector, the industrials, the discretionary space, XLC comm services. So a lot of the mega cap names, a lot of the software names, a lot of the semiconductor names. We did see some green in staples, healthcare, real estate. These are very defensive sectors, so we are seeing that again. Rotation, and that's something we've highlighted here for the last couple of weeks. We certainly have seen that, sensitive to defensive, cyclical to defensive, or I would say just broad market to safe haven trade. But not so much in gold, more in like these names that actually have like revenue behind them. It was a terrible day here for growth, especially in the small cap and mid cap space. I think ultimately we did see value outperform, and the staples, real estate, healthcare, a lot of the stocks are in the value component. But right here, core was in between what growth and value did. But all in all, it was just a really ugly day for large cap stocks, mid cap stocks, core stocks, growth stocks, just an ugly day for stocks in general, which all stemmed off some tariff jitters. Now, the markets remain on high alert because of trade war developments. President Trump injecting fresh uncertainty around tensions with China. As reports said, the president could reconsider steep restrictions on U.S. software exports to China. Trump threatening new export tariffs, and this escalation is going to continue back and forth until Xi and Trump have their meeting. But there was some good news. There was news that an India-US deal is about to come to fruition. The US is about to close a deal which would lower India's tariffs to 15 to 16% in a trade deal from the current 50% mark where they are right now. So it does show the US and India are in some form of a dialogue. And ultimately, this is what moved the market today, along with the market just taking a breather from those April lows as we assess earnings season. And also that bid for buybacks is not there. We're in the peak buyback blackout period. And that is why we're seeing stocks like Netflix down. The stock was dragged down 9.41% year today after the streaming giant missed earnings expectations thanks in part to a Brazilian tax dispute. The stock taking a breather down nearly double digits, and so the market obviously trying to reprice the stock accordingly. Google was actually really, really positive here in the pre-market. It had some of those gains, but was largely flat. And this is because Google announced that it ran a verifiable algorithm on its Willow computing chip, demonstrating that it was able to complete a calculation 13,000 times faster than the fastest supercomputer. Google stock was flat, and technology stocks sold off. Specifically, quantum stocks, they were down 12.51% today, after being down anywhere from 25 to 30% so far this week. Brutal price action in this space right here, and the Google's breakthrough simply did not help the momentum in these names. DraftKings was up 4.18%, completely bucking the trend today, following an announcement that DraftKings, the company, had entered the prediction market space with the acquisition of Railbird Technologies. And then for everything we saw today, there was only 1,900 advances, 4,400 decliners. We saw net outflows in the Nasdaq and the New York Stock Exchange. The S&P 500 falling shy of 1%, and market momentum continues to look real sick. We've lost the 5-day again, the 20 and the 50-day not looking too good. These numbers are getting a bit out of hand. We're still holding the longer term moving averages, but if this market momentum continues, we will eventually lose them. Let's hop on the charts. Now, looking at the charts right here, guys, very, very interesting trade. Now, the S&P 500 down 0.57%. Now, the market is still open, so we are seeing, the market bounce ever so slightly here from the lows. Still red, however, led by the mega caps and high beta, the Russell 2000. But again, bouncing. The equal weighted S&P 500 performing the best. Profitable small caps and mid caps somewhere in between. Growth and value down, but growth underperforming value. Value stocks was the place to be. Internationally, everything but India on an India trade deal was up. India was up 1.51%. Everything was down. Middle Eastern stocks, European stocks, China stocks. Crypto taking it on the chin, but hanging in there. Let's be real. Fairly resilient, with Bitcoin only down 0.2% and holding that 109,000 level-ish. Volatility ticked up. You'd think volatility would be up significantly higher than what it is, but the VIX barely moving. So when you see stocks down, VIX barely up, that is telling us that there is still a little bit of vol compression in this market, and ultimately the dip buyers are still there, somewhat entertaining a bid underneath this market. The 2-year and 10-year yield fell. The dollar was flat. TLT surged on the back of yields. And then gold and silver falling, but, being resilient, relatively speaking. You see gold down 0.23%, outperforming the S&P 500. Now, let's hop on the daily chart right here, guys, for the S&P 500. And I said dip buyers were coming in. If we zoom in, you could see that is the case right here. Look at this wick. Dip buyers are coming in. And again, this isn't really anything to be concerned about. Once we start having price discovery here at the 6,600 area, that's when we could say, hey, okay, maybe we're going to go for a lower low targeting these lower levels right here. But as it is right now, ultimately what we got was an all-time high, a pullback, an all-time high, a vicious pullback, and now we're rallying all the way up, and we're seeing a bit of a pullback. If we could sort of stage a pullback right here and move higher from there into those all-time highs, this would just be literally like trend continuation. However, if we start to have price discovery at these levels right here, that's when things can get a bit out of hand, and then we can start targeting lower levels. But as it is right now, I am still of the opinion that this is a dip buying opportunity across the board in the Nasdaq 100, because all these stocks made all-time highs as recently as last week. I think the Nasdaq 100 is a buy the dip. If we get one, the Russell 2000 as well, that's an all-time high for the Russell 2000. The RSP, the equal weight, that's an all-time high for the equal weighted S&P 500. Mid caps as well, small caps as well, guys. So ultimately in this market, you want to be buying this dip if you do get the opportunity. If we do go lower, we want to take advantage. Now, ultimately, I do think my dream scenario would be is we get a pullback here to the 6130 area, and then we continue the rally into November, into December. It's going to take a while. It's about a 7 to 8% drop from here to this area right here. So it's nothing crazy. It's more like a garden variety pullback. That's what we call a 5 to 10% pullback, sort of garden variety. Anything more than 10%, it becomes a correction. Anything more than 15%, it's a severe correction. And then about 20%, that's when it becomes a stock market crash. But all in all, guys, I still think that earnings are looking really good. Margins are expanding. Rate cuts are coming. Trade deals on the horizon. Yes, it is causing volatility. This is a reason for us to stay long, and earnings in 2026 are looking to be solid as well. So you don't really want to fight this market. The trend is clearly to the upside, as you can see, especially when you look on these longer charts, the weekly chart, right? Very, very clear which way the trend is going. And in such scenarios, you sort of want to stay long. I don't think the music is going to stop right now, especially when we are going to grow, mid-teens next year in the S&P 500 earnings, and margins will continue to expand. Looking internationally, all of these markets are looking a little bit sick, but international stocks are holding up a lot better than US stocks. You could see European stocks breaking out right here. Same with Middle Eastern stocks, sort of like breaking out right here and holding these very key trend lines. China not holding up that well. You could see not trading quite at the highs, trading at the lows right here, but holding this 38.43 area as key support. India stocks, look, they're resilient. They're moving higher. We'll see if they go ahead and take these highs right here. But all in all, Indian stocks have a lot of work to be done. And pretty much from like June 2024, the Indian market has done pretty much nothing. So for the last 14, 15, 16 months, the Indian stock market has done virtually nothing. Now, looking at Bitcoin has also done pretty much nothing for the last, I would say, year or so. That being said, off these lows right here, we've seen a blistering rally. In fact, if we take a peak to trough move, right, you're looking at a 70% move here in Bitcoin. And for those of you that don't know, go watch the videos in April. We were strong buyers of Bitcoin right here, looking at global M2 money supply and say we will go higher. And ultimately, we remain constructively bullish on Bitcoin as long as we hold the 100% mark. If we consolidate here like we are, that probably does mean upside into the end of the year. Ethereum, as long as we hold this trend line, as you can see right here, or this falling pattern, and we are holding it, as you can see, I do expect us to probably go and hit these highs sometime in the future and either break up or down. It really depends on what the market is feeling. Although I am bullish on Ethereum, and I do think we go significantly higher into the future. Guys, like I said yesterday, I think you should probably start looking at some of these AI infrastructure names. APLD down another 9% today. I think this is where you start, down another 3% today. I think this is where you start allocating capital into these names, APLD, EOSE. These are small cap names, okay? So don't get too ambitious in these names. NBIS, this is a little bit larger, as you can see right here. So I click the Class A shares. Apologies, this right here, NBIS. I think this is where you start stepping into these names, right at the $100 mark right here. This is where Nebius Group started to break out to these highs at 140. If you want the biggest of the bunch, it's CoreWeave, excluding NVIDIA. So this is where you want to start coming into these names. You can see they've sold off significantly from their highs. I really do like APLD. I think this is a very, very strong stock. I do think it's definitely going to go higher. I think you want to step into these names. If you want more speculative bets, you could look at BITF, right? Big Farms. I think, again, this is probably where you go ahead, enter these names. Another name that I do like, especially when it comes to the power generation side, is Plug, a ticker symbol PLUG. Again, I think you step into these names right here, because especially when you look at it like peak to trough, right? These names are down like 39%. So you step into these names, I think we're going to see all-time highs before the end of the year. Very volatile. Keep these allocations small. With regards to NVIDIA, I think it's still looking a little bit pricey. I'm looking for a move here to the 153 area. If we can get this, and obviously the tech and the S&P 500 will fall as a result, and we can bounce right here. This is probably a great buying opportunity, looking for a $200 price tag that we did see at the end of the year. Earlier this year, we're looking for a $200 price tag into the end of the year. Now, gold, guys, I think gold is going to continue to move lower. I think gold, seeing a bit of a bounce here, quite a bit of a wick, but I do think gold is probably going to move lower. I do think we're probably going to see this area right here. So it's going to take a number of weeks, and it's probably the price action is probably going to look something like this more than anything, right? Something like that. And then we'll probably make the next move high. I am bullish on gold, especially this debasement trade. I'm a believer in it. It's why I actually hold Bitcoin. Bitcoin actually looking to turn positive here. Very, very interesting. So this market really bouncing, finding a low. You can see the daily chart, a lot of these wicks holding true. So we'll see what happens. Dip buys certainly coming in, still red for the day. Sellers still taking the cake, but we'll see what happens over the next couple of days into the weekend. Maybe once we start getting some certainty about the government shutdown and getting these data prints, we can then probably continue to move higher. But as it is right now, any dips we do get in these markets, it's a gift, because you want to go ahead, buy those dips, looking, especially 3, 6, 12 months out. The S&P 500 will be higher in that time period. Guys, and diving into sentiment, this is Goldman Sachs U.S. Equity Sentiment Indicator, which combines 9 measures of positioning across institutional, retail, and foreign investors, and has historically been a statistically significant signal for near-term S&P 500 returns. And this indicator has slipped to negative 0.06, essentially pointing to flat S&P 500 returns in the coming months after months of strong gains from these lows we saw upon the tariff tantrum. And it's essentially telling us that the rally may be running out of steam, at least for now. Now, ultimately, I am very long-term bullish. Why? Because earnings are very, very good, and they will continue to be good. 9.2% for Q3 so far, 6.3% revenue growth, 87% of companies reporting above the analyst expectation for earnings and revenue. Now, it is early days, don't get me wrong. still only 78 companies have reported, but very, very good numbers off the bat. And we have had some big companies report as well. However, guys, we do have to pair these longer term fundamental signals with the technical signals. And when we look at margin debt as a percentage of nominal US GDP, you can see right there, things are actually crazy. And getting to the highs we saw here in 2021 and some of the highest levels ever barring 2021. So margin close to $1.1 trillion is really, really frothy. And these are signals to tell us that, hey, maybe there is a near-term pullback on the horizon. But we also got to pair this with the macro. And when we look at the soft data versus the hard data, the soft data has actually taken a bit of a dump. The hard data has actually remained very, very resilient. So I think right now with the government shutdown, you don't really want to look at any of the soft data. Probably the hard data we can get our hands on just to give us a solid figure as to where we are. One of them is federal employment tax receipts. We still get this data. We still have them. And right now we're looking at 7.9% here for October. Very, very solid stuff. Furthermore, the Starkling Index, or the ASA Index, which tracks weekly shifts in temporary and contract employment, just turned positive for the year, guys. This is a leading indicator for non-farm payrolls. The labor market is recovering and has likely bottomed. It's just not showing in the lagging data yet. So the hard data is telling us the labor market is okay, but we just need that reflected in the official data that is to be reported at the end of this week into next week once this government shutdown is resolved. Looking at data for the rest of the week. Today's Wednesday. We had some big names. We have some more big names. Now, after the close, we have Intel. That's the biggest one everyone's going to be looking at. But we also have Ford, Deckers, they're reporting, as well as T-Mobile, Blackstone, Honeywell, American Airlines, United Pacific here before the open on Thursday. But guys, the earnings season continues next week. In terms of data, initial jobless claims, we'll see if we get those. Existing home sales, I'm not sure what the plans are with regards to this data, but we'll take it as it comes. Let's assume it is the case. This is what we will be getting. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.